yet another episode on Cash to Code, a very, very interesting series where we discuss with fintech founders on building exciting companies in India and across the globe. Kicking this episode right off with Madhu, who's joining us, who's the CEO and co-founder of M2P. M2P is a very interesting startup that empowers fintechs, banks, and businesses with custom APIs for a wide range of financial services. Today, along with Amit, we will be jamming with Madhu on his journey on building M2P, the very interesting product suite that they have today, and a decade-long journey of building a fintech startup from India. Madhu, to kick things off, a very interesting icebreaker for you. I'm sure building financial instruments in India definitely come under a constrained environment and all for the good. A fun question for you. What RBI circular is keeping you awake these days?
Thanks Ross, for there couldn't be a better icebreaker than that. But I think now we are so used to it. Every Friday there's some circular. The week never ends without looking at the circular, right? So, but jokes apart, I think there is a lot more. I mean, we've seen the wave, not just in the last 10 years, but since the whole TPF Act was passed in 2007. I used to work for Citi and Visa, where we've seen this evolution from a regulatory bill, where they looked at what are the areas where at the core of it, how do we protect customers, how do you build trust, how do you ensure that there's no systemic risk that comes in. I think that premise has not changed, right? But the actors in the ecosystems have evolved, and therefore you've had a different degree of regulatory sort of, lack of a better word, crackdown that keeps happening. But if you go back in time and talk to operators who were in the system a few years ago, it's still the same. I remember we never had like a prepaid charter, countrywide. So first regulation around prepaid APIs came in 2008 or 9. So we used to borrow from a UK company, UK non-profit, which would come and give us yarn on how API should be done and whatnot, right? Because those products didn't exist in this market, so therefore we had to look at people who were running some of these products. To where we are today, like in some of these products, globally we are the largest just by the sheer population scale that we have, right? So therefore, I think in some sense, it's basically a checkpoint every now and then. It's a editor when you're an operator and you're scaling, but it's think of it as an investment.
Absolutely. And Madhu, you mentioned Citi and Visa as probably building blocks to where M2P is today. Can you walk us through some of those early days? How did the idea of M2P really come to be? I'm sure some of these seeds were sown in your previous experiences, right?
My co-founder and I were colleagues at Visa, so I've said this in many places. Right? I think we kind of realized, in hindsight, it looks like all of this we had turned off. But the reality of it is that we had in our day jobs we had to basically work with banks. A lot of companies that will come to us and say that we want to solve for this problem statement or we want to solve for this customer money flow problem. Our jobs were essentially to figure out how do you create a product idea around it and go and evangelize or partner with the bank to sort of seek that idea in the market, right? Let's just pick, for instance, hospital claim management, right? So if India is doing cashless, it is covering only a certain set of customers, a certain set of ecosystem of hospitals that are out there. But if you want to really truly change the way hospitalizations done or cashless claims are processed, can you bring in a payment system in between where you show up at a hospital and the money flows automatically, right? So that means that somebody from an insurance ecosystem would come to Visa and say, this is the problem statement we want to address. Can you help us solve this? Right? And Visa being a network and technology business, they never had the license to do this. What they can do is they can actually take it to a bank, and typically it would be the top tier bank because they had the execution muscle to take on some of this and run that process and stay invested and whatnot. But those journeys used to take like at least like a couple of years for the product to see the light of the day. No lack of intent or excitement. It's just the way banks were structured, are structured even today to a large extent. That the systems that they have to protect their franchises, it itself becomes an impediment to accelerate some of it. And by the time that product sees the light of the day, you've had customers who are moved on. The insurance company guy who was very excited found the next excitement probably, right? So he had moved on and things like that, right? So therefore, that kept repeating in a row. I think 5 years, you can virtually see that like 10 or 12 large ideas that you could work on, and especially in places like Visa where you are perched in a position where you have like a very vantage point view of what's happening globally. Right? So if, let's say you pick an idea, just extend me this example that I gave you. So I can virtually, like in a couple of days, figure out in which market, what kind of healthcare claims really work within the visa system, right? Then just draw parallels to see, let's say if something worked in Brazil, very similar demographic profile, similar stage from an economy standpoint, maybe it will work exactly the same way. But something that worked in US may not work exactly because US is a very different ecosystem and so on and so forth, right? So therefore, our ability to actually see through what's happening not just in India but globally led us to believe that this whole model of how banks were partnering with businesses and trying to go after practically zero to one opportunities, right? Where there's a lot of there's a lot of uncertainty, and you just have to stay invested to see that that there's a product market fit and things like that, right? So therefore, we kind of realized that this was a challenge that needs to be addressed, but we never really got our heads around how do we sort of do that, right? And we, all our, coffee conversations in corridor conversation, we done like, we always gravitate towards saying, what the frustration on your day job is, right? And then we also saw firsthand how, the first wave of apps came in, like 2011, 2013, right? Radio was like a 10 million wave of users, like 2014. 10 or 20 million users. And you had the first wave of fintech ideas that were, and fintech was not a buzzword back then, right? So it was about somebody who was a recharge company saying, I will also handle payments, right? So that's how crude it was, right? And then Flipkart saying, we needed payment gateways that can scale because there was no big billion. They say, nothing. The best that you've heard of is what Alibaba was a billion across the board, right? So therefore, I think in a lot of ways, when we looked at payments and more because we were closer to that business, most of the processing assets were all built, pre-iPhone era, right? Because the whole app ecosystem takeoff happened after iPhone came into existence and the App Store came into. So therefore, in some ways, you had a market where you had new products set up, but the legacy platforms were not ready to actually be strapped onto those platforms. So that was again a white space that we saw. And then we said, maybe there's an opportunity to go out and build this, build this capability around how payments are processed in a more elegant, more tech first, more mobile first kind of ecosystem. That's what we started doing. And then the choices were, you had very, any investor action and all that, right? So you had to basically figure out what you want to do with it. One thought process was that, can we do something B2C or something more enterprise, right? Because the businesses that would come to us were B2B, they're just trying to solve for their customers. But the ecosystem was doing B2C, right? All of these were companies that were there. There hundreds of them were there. You barely have a few of them. You can count them across them today. Right? But so therefore, we are torn between do we do B2C, do we do B2B and things like that. But fundamentally, we believe that there is some, thing that we can be a layer that can sit between businesses and bank. Right? That was the starting point. And then we also were of this view that we need to run this for a couple of years, because that's the only amount of savings that we had to say, if you don't get the right fitment, the safe harbor is, then you just go back to a job, right? If you don't find that traction and whatnot. But after you jump down, you basically realize that you have to be like the Romans, right? Get to the shore, burn your ship. You have no choice but to keep moving forward, right? But so therefore, we said, let's start tinkering on those ideas. And in 2014, I first quit. By then, Muthu had moved to Chennai. He joined PayPal. He left Pizza. He joined PayPal. But we keep debating this: should we take that leap of faith and whatnot? And ecosystem was like too very for us to like actually go to a lot of people and ask about it and things like that, right? So therefore, that's how we. The idea was pent up frustration in our day job that led to saying let's go attack this. Then second on the side.
Talk to us a little bit about those early days as well, right? You mentioned you quit. You had a B2C idea that you were toying around with. B2B infra was still very, very early in the fintech space. And also funding in general, like it wasn't like 2021 where if you had a Notion page with a small blurb, take $2 million, right? That wasn't the case back in the day. So walk us through some of those early days post, say you put down your paper. What were how did you go about, early team, you had some savings in the bank. What were some of the experiments that you...
Yeah, I think one of the things that I did was I joined another fintech which was run by a friend. Just to, the intent was like I spent at least a year because you are basically flying at 30,000 feet, you need to come closer to the ground before you actually hit the ground running, right? Therefore, I said I'll spend a year trying to understand what goes behind it. Obviously, there's this whole aspect of fundraising and whatnot. But in 2-3 months, I just could not stay there. Not because they were bad. It's just the fact that you're building on some ideas. You're just torn between I should just make this jump, and it was not like too different, radically different than what we thought or what we perceived, sitting outside, right? So I quit in like 2 or 3 months, and then we sort of set this company up. But I think the going in assumption was that by then we had these ideas, or we felt that need for building something where businesses can adopt payment more efficiently. So there are a few low-hanging opportunities that we faced in our day jobs at Visa. Businesses like gold loan companies, microfinance companies. Remember, like 10 years back, you didn't have this kind of banking access, right? Like, especially for people, in the lower economic strata, they had no access to banks. And microfinance companies used to face a lot of challenges around disbursing, cash. And microfinance was a big booming business back then. Several of the MFIs back then are small finance bank, right? Almost about 8 or 9 of the 10 level licenses that were given out were all microfinance companies. So the realization that we had was that maybe that's a segment that we can go after where our platform is of immense value and we can actually demonstrate traction, because there was a certain level of equity that we have because of the network that you have access to as part of Visa. Before that dies down, we said we should just make good or capitalize that particular equity rate. By the way, that equity never goes away. It's like one of the good parts about working in very large organizations is that if you've done like decently well, if you're not screwed things up, people respect you for what you did in that. You're known for doing something in a large setup, right? So therefore, we kind of went to a couple of banks. Basically at that point in time, our notion of what a bank is was largely a regulatory supply side. So I will rent the license from them and we'll run the business. Right? It's our business to run, just that I don't. They start giving me a license. So I'll rent it from somebody who's got that. And then you basically run this as a platform play where we were talking to this demand side, which basically came to us and said, I want to make money movement or paying out or disbursement more efficient. Right? So I don't want my ground staff on the ground to actually touch cash. Can you connect? Right? So that became the first wave of the product, which basically was a disbursement use case. But what we achieved with that was essentially the ability to actually abstract out the complexity of dealing with the bank. Right? So that was the most important proposition. Right? It was not the tech, it was not how fast we could do. We told these guys that you don't have to deal with the bank, we will deal for you, right? Like, so it's not to talk to bankers and things like that.
Specifically, you're talking about the BIN sponsorship.
Yeah, the best one. So we practically evangelized that model. In the first year of that, I did it in my visa. So RBL Bank was the, Ritesh who went on to do many other, crazy things. But he was the first guy who took the bite in India to actually do like BIN sponsorship as a model, right? And then we had DCB as our first bank. Like in the first few weeks of me setting up the business, the bank was kind to actually, they are a big supporter then and they continue to be like.
Did you have an existing relationship with them, or how did you?
Yeah, so that's the working relationship. So you know them because they are part of that ecosystem, and then you kind of basically just build on it, right? Like, so therefore the first wave of the product was essentially just lending companies where we gave a bunch of APIs to connect into their loan management system, unheard of in those days, where instead of cash being given out, money can be loaded into a prepaid card. Prepaid was a relatively convenient product back then, right? So the whole prepaid on credit started, almost 12, 13 years ago. Right? Like it took a decade for the regulator to realize it. So that's supposed to be happening. But having said which, I think the product then became that this is like a abstraction layer for how do you run banking products.
Right. And just for the benefit of the audience, basically you're saying at that point of time there were no Jandan accounts. Now we have 1 billion people having those accounts. So if you're giving a loan, where would the money go?
Yeah.
So you basically created these quasi bank accounts in the form of prepaid accounts, and you solved all the complexity which was there.
Yeah. It's fascinating, right? Like we had one of the microfinance SKS back then. So we were doing a disbursement in somewhere outside of Mysore, in a small village. And the way microfinance business runs is that it's a joint liability, so like 20, 30, 40 women collectively get a loan and everybody is responsible for each other. And you have something called as a center meeting, which is basically in the village, in the school or in the panchayat office or somewhere. All of them congregate once a week, once a month, whatever that frequency is. Basically to establish that there is no systemic risk that is getting better, that everybody's business is doing well, money will come back and things like that. Right? So that's called as center meeting, right?
Yeah.
So disbursement also happens in that way, right? Like so you basically today, any MFI you go in, when the day of the disbursement, let's say 30 women get 20,000 rupees each, somebody carries 6 lakh rupees in cash, hands out, doles out this cash, instead we replace that with a card, right? So when we did this in this village, you had this customer who basically, the first customer, right, like for the bank, for their exactly, but there was a process and back then the data was not great. So this guy had a tablet where he'll record all of this. He has to write back on his two-wheeler, go back to the central office. It's like a hub and spoke model. So some 20 kilometers away will be his regional office, where he goes to docks this tablet, and then the workflow will basically start to say disbursement can happen. So it's like a half an hour, and then a bunch of us who were there to do this first transaction. We were all at the tapri, we were having a chai and all that, and we get this guy, the manager gets a call saying the disbursement is done, and we're looking for this woman and she's not to be seen, right? And we were wondering where did she disappear? So we're all waiting to do this and get back to work. Right? And then we realized that she went to the village door to door saying a bank has given her a data, right? So the real power of financial services, it was like so stark that what we take for granted, right? Then you will have like, if I open your wallet, you'll have like some 2 dozen nearby cards, right? But women said, I have asked my son to come back from his work because I want him to be by my side when I do the first transaction. So the aspirational value in some of this, right? Like when people talk about, and I see VCs saying this, right? Like Fintech ecosystem saturated. They have not gone beyond Bangalore bus. The real India is like, at least 200-300 million people who still don't have access to finance, and technology is the only way that you can get to them and solve them at scale, right? So therefore, that kind of fascinated in the way whatever that work that we were doing in a limited way could bring so much joy to the customer, right? Like, she probably met one of our life ambitions in that moment. Right? So the point is so therefore we realize that there is so much of power to this platform as an enabling infrastructure, right? So that kind of resonated really well with us. And then as luck would have it, the whole, between 2015-16, several of these ideas got tested on our platform, gold companies, this and that. And then Demon happened, the whole world turned upside down, right? Fintech became Fintech, etc. You had all kinds of companies running from it. That was the first wave of financing, even before 21 craze happened. So you are a corporate expense management company, there were like a dozen of them which were getting it out. So to everyone, we were the go-to platform even before they went to investors, because you need to have a MVP, right?
Yeah.
You need a working product.
We had a joke in the fintech industry that M2P and Madhu these days are like the index of fintech.
Yeah, I think we right.
Yeah, probably.
Yeah.
So we have in that wave in 2016-17 companies that were born that were with their first set of products. We have 12 or 13 of them who are unicorns.
No one.
Right. So therefore, and if I were a VC and I had written $10,000 checks into each company, I would have made Selenium far greater pool of returns than what I've done doing a movie. But that changed when when it was playing out, and in between, right? Like in 2015, after a year of actually seeing traction and all that, we went to investors and in our Navy team tried to raise some capital and all that. Like, nobody understood this business. Maybe we didn't sell that properly. Right? But we also had this overhang of this B2C, right? We said maybe because at this day getting money, we are not able to get money. So we tried this product, which was more of a consumer-facing wallet kind of a proposition. But the real underlying thesis was that we will have much as how we have a lot of respect for how Builders guys built out the whole ecosystem around billers and whatnot. So if Builders could do it for the completely unorganized billing community, we can do a similar thing for the online and offline community as well, right? So we said the world will move from a pull. So if you use your card, money is getting pulled from your account, right? The world will move to push payment, and we deployed the first version. This is pre-UPI. We deployed the first QR scan and pay capability. Right? Obviously, it was like too ahead of its time, and we didn't have the capital. So whatever we were learning on, doing load products for some of these gold loan companies and all, we were burning that on doing this B2C business. Right? Where we felt that we got to 3,000 odd merchants in Chennai. We had, and back then the data was expensive. So we bought phones to basically, the idea was that whenever you go to a small shop or a grocery store or a corner store in your neighborhood, they'll give you a toffee instead of the chutta. So the idea was that that chutta will go into your digital wallet, right? And then 5 times over, you basically then say that I don't want all of this change, take that money. So it was basically the lowest CAC customer acquisition product because the merchant was doing it. And the insights there were crazy. Merchants were paying 7 or 8% to get a small currency denomination. So if you're getting a 500 5 rupee coin, you'll pay 2 or 3%. If you're smaller the denomination, the higher the subvention. Okay. It is an industry. It is a cottage industry where there is an aggregator who goes and collects from all these beggars, temples, and all of that, packs and distributes that. Right? So insane, right? And we said, this is, and despite all of that, the merchant is actually, giving toffees to people, and people hate it. Right? Nobody likes to just carry that itself. So we said we'll go after that segment where we leverage the merchant to actually help us acquire customers. So chutta nahi hai to then we'll just from the app we'll send them to rupiah. They'll just take your mobile number. It's available whenever you want to download the app. You can go. This is when app was not so prevalent, right? 2015, 16.
Yeah.
Fantastic. We got 10,000-11,000 customers through that, and we went and we got over enthusiastic about it. We bought 100 odd phones, gave it to merchants, saying for Swami Garu, right? Normally in a grocery store, the owner and the operator is the same guy. If he steps out of the market, the chotu doesn't have a mobile phone now, right? So we had to keep this instrument because good part of the day this guy is not there. And you typically will do some of this only in the lean hours, right? Like midday, keep this and you don't do it in the crowd. So we said, let's give the phone if that is an impediment. We had crazy complaints. We had one merchant calling and shouting at us, "Boss, kya ho gaya?" Right? No, this guy is watching porn with the phone. I broke the phone. You give me a new phone. Data khatam ho gaya. You recharge now. All of this nonsense happened. We were just like the way we were not. We just didn't think through it entirely. And we just had to take a call. Right? This was bleeding money, and we didn't know how to run it. There was the other side of the business where we had like people who were paying us our bills and cross-subsidizing some of our stupid ideas. But had we persisted, we were like that phone pay equivalent, right? Like in terms of what we had to do, because push payment and UPI was not existent. Visa had a product called Visa, so we put it on that rate so that Visa will fund some of it and things like that. Right? We had like 2-3 banks that got out pretty well on that. Around the time, if you remember, the use cases that actually found traction on push payment was canteen payment. Zeta had a product in the Sodexo sort of space. So we said we'll just go after this use case and try and solve for it. But then we had to we just could not raise capital for that business, so we shut it down eventually. This is not a 48. But our customers were paying our bills, and we were just churning out numbers. So we said we don't need capital, right? We will run this business with customer money, and we just continued to build out. And thankfully, in 2016, Ep1 happened, and 9 out of 10 fintechs were on our platform. Like, there was no looking back from them on. We basically kept the idea of how do you enable. So we obviously started doing more, added more banks to the kitty. We figured that how do you manage, and it's also cyclical. So you'll find one bank being like really gung-ho about fintechs for 18 months, okay, and then they completely go politically. Right? They say, someone does audit or and you will not have that bank. No longer is the fintech friendly bank. Right? And you will find this actually going in cycles. So we figured that just to keep that engine room humming, because for us to be able to help more and more businesses adopt this, or more and more fintechs, early stage companies adopt it, that engine room cannot, stop. Right? I cannot have a situation where I don't have enough banks in the economy. So therefore, we actually had it more like by 2017-18, we had like 4-5 banks that we have partnered up with. By then, the UPI also started scaling it. So we had a situation where some of these banks would come back to us and say, I want to, this fintech idea we really like. Or if you remember, like Pockets and PayZapp, all of that happened in 2017-18, right? Because banks were doing that catch-up game of what fintech execution was happening. But it didn't stop at those ideas. Any ideas that were relevant in the ecosystem, right? Where there's customer adoption that was happening, banks said, we also want an avatar of that product, right? So we have this feedback loop where innovation was happening on our platform. We could see those ideas, getting built on top of a capability. And then banks getting excited about it, right? So we realized that this can be like a great productization opportunity where some of these ideas can actually be offered, but we never really figured out what's the right economic model behind it. Right? So because the way banks are structured, even today, to a large extent, they are only focused on saying, give me this product for this price. I know how to run that business. Right? So it's not a symbiotic, it's very vendor principle sort of relationship. Therefore, we never really pressed the button, but we saw that opportunity out there. Yeah.
Useful. Just 2 quick summaries from what you have said. I think just as learning from any fintech founders, and I often discuss it as a early stage investor, that one, even for somebody as successful as Madhu in M2P, there's so many things that you tried and many things don't work out. So don't get worried, whatever you are trying out, it will take many failures to come to a point. And I think it's very interesting, the entire way that, so in a way, you could, all the stuff that you were enabling in B2C, you could have actually gone ahead and did that on your own. You had but then the discipline to keep yourself to stay in the infrastructure APIs business, I think that's something very good.
Also claim on your strengths, like realizing that a year into it, that both ideas are great, but somewhere we are, the founder market fit also is towards B2B, and somewhere right place, right time, right? You couldn't have predicted it, but 2016 happened and you were probably maybe one of the best products in the market at that time. So, not that you can predict for it. Talking about, I think, early rounds, you all met pretty early as well. I mean, I'd love to bring you into the conversation. How was Madhu back in the day when you met him? Now, of course, like you mentioned, one of the hottest fintech startups and lots of investor interest over the year. But back in the day, what really excited you to come in early into M2P? What was the idea that you thought was shaping up? Because even fintech and infra was very early in India back in the day, right? So what excited you to say, okay, this is something that you want to try?
First of all, Madhu looked exactly the same. I think he's not aged. We should do a separate episode on aging,
Yeah,
not to stop that. So 2-3 things about me. So I had a little bit of a vantage point because we were building Medici. We used to track 17,000 fintech startups. So we had seen some companies like Marketer, etc. in other markets, and I thought that instead of consumer fintech companies, I was always more interested in companies that are powering them. Because new banks come and fail, consumer fintech companies come and fail. But some of these companies, right, they actually do pretty well. So that was one insight I had picked on very early on. And after meeting Madhu, we did a public whiteboarding session in my office. The investment actually happened much later, and he wrote a very small check, to be honest, right? No credit in kind of, finding out a company and all that. After those many interactions I had with Madhu, I think it was very clear whatever he is doing, we should, become a part of it or partner or something. So investment was very small and also like a byproduct of the whole thing. Because I had seen some similar companies and then I was very convinced that these guys, by the way, one thing just to double tap on is Citibank and Visa. Two companies that Madhu and the co-founders have worked at. These are some of the biggest talent breeding grounds. Like they have phenomenal entrepreneurs have come out of it. So if you know all of this history, I think you would not invest in a company without building this.
Was that a practice you did? Did you meet like senior operators? Was that like a playbook for you, or how did you come across? Because whiteboarding, is it a practice that you have been able to follow?
No, I think, the thing is that, if you, once you spend like 3-4 years building the business, right, then you are essentially saying this is for real, right? Like it's fun.
Yeah.
You're spending your planning career trying to sort of prove a thesis that you started working on. And then you have to basically look at, what typically founders do is, what are my global comparables, right? Like, that's one way to sort of look at it, to say that, in this market, this company had done this well. How do I, sort of learn from it, right? And then you kind of reach out to maybe investors and things like that to basically learn from them, what they've been through and things like that. But when we looked around the first wave, the investors did not understand the business. And there were many companies globally also, right? Like Marketer became a darling of investors money in late 2018-19, like when they hit their account. They were done to go public in 2021 at $70 million. But then there was nobody there. And then therefore you had to go to folks who have built that ecosystem and things like that. Also from where we were, right? Like a lot of the founders also were trying to actually, go through that development. Several of them were A, B, not even C, right? Like in 2017, 18 and all. So you really didn't have like a large ecosystem where you can go and say, let me talk to these 5 guys and not
In 2014-15, there were very few people who could talk about fintech like this. Like I literally remember Anish and we would sit and discuss about new banks and like there was no discussion at all. You would have to find people like Madhu to actually talk about new banks. Very few people knew it, so it was very interesting. I think this could be a good segue into. I remember last year we were in the US, at Point and you had mentioned something. I was asking like, you're good at many things, but there's one thing that you must be really good at, and you had said you're very good at solutioning. But below the solutions are products, right? So I want to understand, and I think for the benefit of the audience also, if you could talk a little bit about what are the products, and in that, which products actually drive a lot of revenue for you?
Yeah, I mean, so it's at least for us, it's been an evolution, right? Like we started focusing on payment sort of capabilities at the core, but then we looked at, in 2019, we said there is more to it, like to my earlier point around banks coming back and knocking and saying, can we launch our own way into these products and all. And the few macros that were playing out, right? Like UPI was scaling so fast that every other day, all of us personally would have experienced it where your Google Pay transaction didn't go through, HDFC was down, ICICI was down, SBI was down. So the overarching feedback that we heard was that most of the banks tech is not scaling. And then we said all of the learning that we had in like 4 or 5 years of execution, we realized that banking tech was was at a point where it was no longer a choice that banks have to say how I will run my product and my strategy and how do I go to market and all that. Like for instance, some consumer tech platform launches a campaign, the bank CEO process is steep, right? It's not nothing of his doing, right? Today, if systems are stretched, the bank can basically say, I don't want to run this campaign today. But pre-UPI. But that's no longer a choice. You have to basically be able to scale infinitely because the levers are outside the bank. Right? That's a big shift in the way banks were approaching tech, right? And they were not ready for it. Which is why it took like a couple of years, a lot of regulatory conduct basically to say that like large banks were reprimanded by RBI to actually get their act together. Right? There was no dearth of talent, money, any of it. Right? It just if you fundamentally start looking at how they are structured, banks procure technology the way they buy furniture, unfortunately. Right? So the guy who decides eventually is the guy somebody sitting in procurement. He will use the same yardstick for buying this table vis-a-vis buying a CRM sort of product. Right?
And just to double click on it, so basically banks at that point were either employing an IT services vendor,
Yeah.
like
Even today,
or they may have a few large product core banking solution, from.
Say what? It's not about large or small, right? If the fact is, if today if you look at a retail bank, there are maybe about 20 different platforms. So you'll have core banking, cards, UPI, risk product, debit card, credit card, loan. So if you aggregate all of this, there are like 20 different tech stacks. So 20 of them are provided by 20 different platform providers, different code bases, whatnot. And each of them will uniquely have a certain degree of scalability built into that product. Right? Like if I'm a UPI product company, I've built it now, right? Like in the last few years. So I know that this needs to serve a certain, scalability. But if the core banking is not built for that, your weakest link is the core banking. You get what I'm saying? So you might have an infinitely scalable UPI product, but for every transaction that happens to the UPI product, it has to come to the core.
Right.
And that is broken, right? So therefore, the way these products are brought together, it's almost an orchestra where the music cannot stop, right? And you don't control the music either, right? Somebody else is controlling it.
I remember this one picture that I had seen in a bank without naming them. There were like 150 applications. Some of them were developed, 10 years back, 5 years back, stitched together, and the whole thing had to work.
It's complete chaos, right?
Yeah.
So there's that product issue around how scalable these products can get. The other issue is more foundational to how you run internet platforms, right? Like today, no founder, right? Most founders would have never seen a data center.
Yeah.
Like 8 out of 10 will say I've never seen a data center. But 15 years ago, the way internet business used to run was you need to buy hardware, you need to run a data center, you need to actually have people managing infra. That's the only way you can scale internet business. Okay? You go to fast, Naukri or Bharat Matrimony, that's how they build the business. Okay? Today, founders have this luxury of logging into AWS, just using their credit card and just getting on with life. The best of platform that's available to a founder in the US is also available. Right? So there's no arbitrage with respect to tech availability. So, but banks are still caught in the legacy of the past. They're still running data centers. They're still having these 20 different monoliths coming together to deliver the product. So therefore, the moment something of an event that scales that is beyond their control, everything starts speaking. And they don't have a quick fix because server came in. So therefore we said this shift from this world to the cloud world for the computing took 15 years. Back maybe it will take 25 years. But it's an eventuality, it will happen. Right? Because there are product cycles, there are regulations, there are a whole other thing, right? Like inefficiency in the way So we said we are at that inflection point where this opportunity to actually be part of that change agent, is in our control, right? How much we want to take on, right? So therefore, in 2019, 2020, we said we have to reset ourselves to start thinking about how do we be the best platform to actually extract every dollar that is being spent by a bank on technology, and that is what we have been executing on. And in that, therefore, we don't really say I like LMS more than core banking, or So therefore, we kind of zoomed out and said, whatever we have done for the first 5-6 years was about how do you help internet scale companies adopt financial services. Now, so that was taking Fin to the tech world, right? And we had to flip that and say we'll have to take tech to the Fin world. So therefore we said we can do this in a manner where what we understand best is if there's an idea, how do you actually build on that idea, right? That's the solutioning part that I spoke about, right? Which is basically saying, if I have to create excitement, let's say I'm going to the biggest e-commerce company, just for example, say if I'm going to Flipkart, I can't be preaching them how they should run their, it will be too stupid of me to sort of do it. Because they know their shit, they know what is to be done, what is not to be done, and what not. Right? They probably have their own priorities. But if I'm not value additive in the way we are presenting these things, like guess what? If you actually, let's say, you want to do like a one-click checkout product, you could do this, but you could also sort of have a capability where we can bring like 20 different vendors in one bite. Right? So what that means is, if you're a category manager in Flipkart, you will think about how much more funnel conversion can happen just because of enhanced access for affordability than saying I'm the BNPL manager within Flipkart. I don't care, or I don't want to promote other products. Right? So therefore, who we sell to became a very important attribute, and then who's my customer and how are we serving that customer. So we zoomed out and said we will do more and more with banks, but we will only focus on banks that can really move the needle on embedded sort of ecosystems, right? So therefore we don't want to boil the ocean saying we'll get 200 banks in the country. We'll be very happy to limit it to like 5-6 banks. But on the other side, every consumer type, whether it's a gaming, food delivery, when we operate, we should be the one that is moving the money for it.
So largely what you're saying is initial, let's say, let me use COVID as a thing. So pre-COVID, large part of your business was you were taking Fin to the tech industry, right? Enabling tech companies to launch various types of products. Then now your business is actually bigger on the taking the tech to the Fin side.
Yeah.
Is that a fair characterization? Okay.
And also so the way, going back to this whole how banks think of tech itself, right? We don't want to do also run products in the way that it's a race to the bottom. So if you, let's say I have like a very good UPI stack, like 24 other people who have it, right? If I say that I have a very good KYC stack, like some college kid can build on GenAI and say that this is the best, AI powered, KYC platform. Probably can detect, false positives better than anybody else, right? So therefore, we also realize that the value is in actually bringing these tech stacks together. So to my earlier point around, there are 20 different platforms. Every platform potentially is a point of failure. Like if you fundamentally think about it, if you open your mobile banking app, of the 20 platforms, like there are 10 platforms that are already activated to show you what you see on the home screen. Your account is coming from somewhere, your transactions are coming from some other data lake, your card system transactions are coming from your card management system. So it is just brought to life when you actually open that particular app. So how do you bring the number of points of failure down? Was what we are focused on to say. You might have siloed tech offerings, and people can go mile deep to basically say, I will specialize only in this. Like within infra also, right? You have in India, you have companies that are focused only on, let's say, co-lending as an opportunity, or red tech as an opportunity, or credit card as an opportunity. So you could go mile deep and build like really large companies, but it just takes disproportionately long time in India because there is value capping which is the reality in India, right? If you are partnering with, let's say, one of the top 10 banks, at a certain point they will turn around and say, "Boss, I'm your largest customer. I don't want to pay you on this."
Yeah.
So there is, while the opportunity set is unlimited, we are super stingy. So you have to, every bank has a Gujarati.
So, and just to sort of objectively sort of quantify things, right? Like a one-word answer to right now in India, like we'll talk about the other countries also. In India, which is your biggest single product and which is your fastest growing product?
So we are actually moving away from that narrative of that siloed, because if I'm preaching saying that you cannot have siloed products, we have to have one compass. So we've actually moved the entire bank-facing tech stack into one unified tech stack. It's still work in progress, but if it's almost like a concentric service, right? So let's say if I start with something as basic as like UPI on credit, okay. So UPI on credit is a very small product in how you can imagine it as a product, right? Because there's a massive monster called UPI. You're wiring up a credit line to that UPI monster, and then the imagination is that it can really power up the whole distribution playbook, and therefore more people will adopt it, and more banks will get excited with that and things like that, right? But if you fundamentally look at UPI on credit, it is nothing but what the credit card is without the card form factor. So you're replacing the card and strapping a UPI, on it. So therefore, if you deploy a UPI on credit product, you also have the capability to do a credit card on top of it. So it's not there today in the market. But guess what? What is a credit card? A credit card is a loan management product coupled with the card for the payment, which is loan management software. Right? Today in the bank, if you go, none of the credit card systems also develop as a loan management software. To the extent that if you buy something on EMI, that gets booked in a separate loan management system in the bank. It runs as an EOD process. Like some of the banks, I don't want to name them. You will see like a credit in your account on your credit card account for the value of purchase that you made, because the loan system is actually giving credits to the product. Right?
Yeah.
So fundamentally, we say that if you deploy UPI on credit, you actually get a loan management software. And guess what? Loan management actually runs asset products. Asset is one side of the banking business. So my loan management software is actually part of my core banking software. You get the drift, right?
Yeah.
So basically, if you deploy my UPI on credit product, you got a fully digital core banking software as part of it. Right. And the option, lives with you. Like the way in AWS, in your dashboard, you can go in and basically say, these are the configurations that I need, it's another card.
Yeah.
That's why we are sort of trying to take it. Right? Obviously, I'm oversimplifying this.
Yeah, because when you get into a bank, they may not want to change their core banking system.
Exactly.
So LMS today.
They won't change. They won't change any of it. Right? In a large NBFC in India, on an average, they have 3 LMS platforms. On an average, they can go up to 6 M. So every product I start a gold loan company, a gold loan business. I say that this is no good. The current 2-wheeler LMS. So get a new product. Okay, that gets deployed. 1 year later, they want to do BNPL. This is no good. Get another stack. So fundamentally, in financial services, what has happened is that because of it that sits in current products, it's easier to adopt a new product and get on with life because there's a business urgency to sort of deliver on those product and revenue and whatnot. So therefore, we are basically resetting that piece to an extent where we feel that a lot of what internally we call rightly, which is ledgering products, which is for banking, loan and on, almost like Android, right? It needs to basically just be open source freeware, okay? But the reality is that if you make it open source and freeware, market doesn't respect it. You need to have a 5-star pricing for it to be considered like a good product. Right? So it's a transition, but we'll get there. But and then if you just stick to core banking, if you have to do embedded finance, today you have external facing ecosystems connected to variety of different products. You have loan products that run on what is called as a loan origination software, right? Basically in workflow. And then you have embedded playbooks going through, and ESB. ESB is the erstwhile mainframes systems that didn't have APIs. ESB was a layer that will an ISO message will get converted to a SOAP or a REST API. So basically, there were all legacies of the past. People are just putting Band-Aid solution on top of it. version upgrades keep happening, Mac spent millions of dollars. But if you really look at it, our composite platform is this enterprise, or what we call as a workflow orchestrator, which is the overarching product that any bank would need, and everything else will get subsumed within that, right? So, it's a journey we are on for the last 2.5 years. So therefore, we'll continue to sort of build up, right? But just the fact that we have to be mindful of how the buyer thinks about it, right? I can build a factory and say that this is the best in the market, but the truth is you'll get still compared to, let's say in the core banking, it would be like a Finacle, Temenos, or Mambu, or whoever it is. See, the product needs to deliver and be like, you need to have feature parity. You might have a whole bunch of other things. I don't even need it. You all the features that you have is great in presentation and demo, but as a bank we may not use it because some of the banks also don't have the product managerial skill set to basically say, boss, how do I put this to good use? Right. That's a challenge.
Got it. So, something you said just a while before that, something I've also looked at, a lot of B2B infrastructure API companies. One of the issues is that as you sort of, you have some big customers, and as the business starts scaling, the concentration on these customers also some of them become very big, and then there's a point where they may say, oh, we are spending like millions of dollars with you. Should we bring this in-house? Okay, so there are two parts to this question. One, have you faced that situation? And how do you still keep them engaged, with you? And and by the way, this question I had asked to Marketa CEO also, and I want to see how do you think about it? Have you faced this?
No, I think so that's it happens at India. Maybe it happens even more.
Okay.
Even before this product has found market fit, they say it's on done. We have no problem in terms of throwing people at problems.
Yeah.
So fundamentally, that's why you will find that as a market, we don't have a high velocity of M&A. In the US, if you see, also to do with the maturity of the ecosystem, right? People don't shy away from doing M&A because they feel that the ideas and the products need to survive, irrespective of the organization, the company survive or not. Right? So therefore, you will find M&As happening left, right, and center because people optimize for time. I don't want to go through the whole learning curve.
True.
You present an idea, तो मेरा engineer एक दिन में करा देगा, right? So it never happens. Right? The reality is that we don't culturally respect time value of money. And just the Western world, you get trained as a teenager, working, you get paid by the hour. So the value for time is non-existent in India. So in fact, to the extent that we said we will go very aggressive on M&A because we don't understand a lot of these aspects, and two, we can spend the next 5 years trying to build some of this, and the ship would have sailed, somebody would have figured out the better way. So therefore, we basically said, how do I go after some of these problems in a more meaningful way, and that kind of I lost track of your questions.
Concentration risk as well as moving in-house
so
bigger customers.
Therefore, when you have this conversation with the customers, right? If you start peddling tech, that risk is real. Right? The moment you go to the other side and say, how do I? It's not that it's going away, but at least, and it operates with different actors differently. Like a founder, you can have like a founder level connect to say, boss, how do I help you scale some of this kind of that works really well. In banks, that risk is very minimal, but you can still get shepherd around to say, we are, once this scales, we may want to do this to a bigger platform and things like that. Right? I think it's just about how you keep moving the goalpost.
Has it happened with you, like somebody moved?
We haven't had, like some businesses you will have that. Again, it goes back to are you a vitamin?
Yeah. I think your answer is very, I am seeing a pattern that even the marketer CEO in his interview, when I asked this question, he also said that the relationship with the founder and how we are, sort of fully servicing them, makes the stickiness, looks like that, right? Okay, let me switch to the other part of this, which is, as an early stage investor, I see a lot of pitches from a lot more B2B infrastructure API companies. And I think because of your success and the success of a few other platforms, And this happens in India, right? Like when Indians found LinkedIn, and then what happened, right? Like we go crazy about things, right? So people are crazy about infrastructure APIs, for the last few years, and literally we see like so many pitches left, right, and center. And my question to you is that is there a space for these many companies, and especially given that you have developed good solutions, good tech, there are a few other big players in the market. Does it even make sense to come up with another prepaid card issuing or another, credit on UPI or whatever it is? How do you see it from that perspective?
I mean, like, there are 2-3 parts to it. One is that, is there more headroom for growth vis-a-vis fintech action is concerned? The answer is absolutely yes, right? There is going to be explosion of a lot of these product ideas that will take off. And fortunately for us, we are at a time when you have this what I call as the second and the third wave of fintech execution that's happening. So we've done away with, we're not no longer solving for payments. We are basically solving for how do I make payments a profitable business, right? Which means that you have to do a whole host of other things that So there would be some level of bundling of some of these capabilities that happen, like companies like us will go out and acquire businesses. So our ability to basically, let's say, pitching our digital bank proposition for one of the large banks, our ability to throw in the whole tech stack for free will place anyone who's a specialist in that particular area. Right? So it can apply for underwriting, it can apply for any very vertically strong company. Right? The displacement effect for us is very minimal, but it can be like life and death for some of the other businesses. Right? So therefore, what we realized early is that we may not have to do a certain set of products purely because it will give us additional dollar, but just the completeness of the tech stack will allow us to be far more competitive than. And it sort of ties back to my earlier point around how do I ensure there are fewer points of failure, right? So if I am deeply integrating some of these playbooks, then I have no reason to go to a third-party system or something that I don't control. That's one part. The second is within the universe of early-stage company. One thing that we have realized is that in India, both banks, non-banks, beyond the top 15 names, it doesn't really matter. They don't move the needle. They don't pay you. It's a drain on time. Governance-wise, you'll have the same set of challenges. Either way, a large bank. In fact, a large bank will be much more organized than a small bank. They have a lot more defense if there's a regulatory audit or whatever than a small bank. So I think that today is not appreciated enough, right? In the way. So you'll have these wins. You'll have platforms growing and getting the first few $1 million low revenue, but unless you're able to add adjacents. Very hard for you to build let's say even a $50 million vertically focused business in India. Doesn't exist.
Right.
So the ARPU at a product level is not more than a couple of $1 million per year. And you can't even feed such banks. There are even 8 such products. Yeah. So beyond $1 billion in overall TAM, Indian market doesn't offer. And how much of that $1 billion can you got? So with our best of execution in the next 2 years, if you're lucky, you get to like $200 million.
Yeah.
And then there will be one cohort of bank which you never want to you have to discount like 60-70%. What we are left with is another $200 million. And how many more companies can actually lap up that $200 million?
So that brings me to my favorite question actually, that I know that you are going outside India, you are present in many markets. We'll come to that part, right? We'll cover that separately. But within India, Decibel Venture Partners did one study and said that when a company in US reaches $5 million, they typically have one product. In India, when a company reaches $5 million, by that time they already have 5-10 products. And basically, I was discussing with someone saying that it's not like we like to do it. It's a necessity because monetization is so hard, right? So, looks like what you adopted is something that is against what YC and VCs and all that say, right? That you build so many products and you like a solution. How did that kind of thinking, like you're almost like a trendsetter, right? Nobody sort of in the VC world, we don't think like that, right? How did you even imagine that? Let's build it like the whole unbundling it happened. Now let's do the rebundling and almost become like Oracle Financial Services or
Yeah, I mean, like, so also is that right? So you're seeing firsthand, you're able to, like, my job today is to see 2 years into the future, right? And just make sure that the team is right resourced to be ready to meet that, 2 years from now. But in a lot of ways, you also sort of move from how you're operating. Like, there's different phases in the company, right? Like you have certain point in time where the organization move from people, product, process, okay, maturity level, right? So you start with people. So your first 50 people are like super important. You have to make sure that you pick the right ones among them. And then you focus the next phase, right? I'm not time scaling this, but basically the next phase is about product, and you have to make sure that you're the best product in town, and you have to sharpen. So we still haven't got there. We still don't have the best product managers working. Right? People should die to work for you, right? So therefore, our benchmarks around this is saying, how do you attract the best product managerial talent to actually come and build, which is still work in progress as far as we are concerned. We have done distribution, we have done scale, we have gone and acquired customers, all of that. Those are, we just got lucky because there are other places, right? Like, that's how I sort of characterize it. Once you have this product like fairly evolved, then it's a mission, right? It has to run as a process, right? So this transition from product to process is very hard. Right? Even the first phase is hard. Like, if I don't have the ability to say that the company has scaled beyond the person, you are hurting the company. Right? First set of people, very hard to turn them down. Like as founders, you just need to have the ability to say, boss, I will hit my level of incompetence. And it happened to the right way. What Prabhu said, we need to get, we've scaled it to a certain level towards the city, and then we got back Kandan and Shriram, went to they were part of our early team, the first enterprise were written by them, but they felt that we were just wasting our time. So they went to the US, they came back, and then we actually pulled them back, right? We said, boss, now this is like a lot of investors are believing in us, you guys have to come back.
That's the big leap.
So when they came back, I think we didn't shy away from just handing over a CTO sort of title to them. Right? So it's about realizing that how much of your strength that you can play to. Right. And also, in terms of a division of labor, how, we don't talk at all, during the day, the visitors here, we don't need to talk, right? But mera territory jo hai, they don't step in. Right? So these are foundational areas where you need to be sure that how do you divide labor between founders, and then it all translates to how to think of whether you want to scale. Every action that you take is based on this particular framework that you want to operate, right? Where you don't have to micromanage, but you should have great degree of detail, right? You should know that you should have the depth to know. So if it'll be foolish on my part to say I will run tech, because it's not my DNA, right? How will an engineer respect me if I'm going to say that I'm the tech guy? So therefore, you have to be detail-oriented, but not micromanage. It's like a very big learning that we have had, where you get the best guy to run that and just kind of.
So switching topics, since you mentioned about product managers and the product function. So as obviously at product folks, they have built the largest community of product folks in APAC or even globally. Yeah. So I wanted to ask you, because you have a very interesting outside-in perspective on this whole fintech thing, right? That in your community and whatever work you are doing, what percentage is comprised of fintech product folks, and then do you see some difference? Are there peculiarities?
I think, to be very honest with you, when we started, I think product management wasn't as hot. It was starting to ramp up. Today, everyone wants to become a product manager. But within this also, I think over the last couple of months, if not years, I've seen people now saying that, hey, I'm looking for opportunities only in fintech, because I think there is a certain wave that people are very excited about fintech, which probably wasn't the case when they were getting started. Second, I think if you see from an innovation or a product point of view also, in the last decade, if one product has touched 1 billion lives, it's probably UPI, right? If you were to see, okay, the way it has scaled in the amount of time it had, no other product. And yes, of course, it has had its tech challenges, but the amount it is processing, is phenomenal for a product like that to come out of India. India has traditionally been a services nation. Over the last decade, we've become, or that path to becoming a product nation's come through. And I think fintech is one layer which, like I think you mentioned, lots of opportunities still remain. Right? We need to figure out, okay, hey, where does it go from here? Even if India has a market that limit, it is probably like UPI is one of the products that is now going global as well, right? Are there more opportunities where you can build here for the world? If you ask me, I think from a percentage point of view, I don't have an exact number, but definitely growing. And that's probably why this is one of the first vertical communities that even we are excited to build out, right? I think from a market point of view, right, from a community point of view, there's definitely a lot of demand to go deeper into the fintech side. Mostly because I think data also says a lot of money coming into this space also. Also, early stage startup. I think.
By 2021, I think 1 out of every $5 was flowing into fintech. I can't say the same anymore.
Yeah.
It probably is more now.
It's probably more.
The other, like, EdTech and all is completely like whatever money is coming in fintech.
So yeah, that's where I think the excitement for us largely lies around building this. On that topic about funding, I think one thing I wanted to bring up is, and especially relevant for 2024, right? Although you mentioned early days of M2P, you also had a thought that hey, maybe we could bootstrap this, right? Because you had some traction coming through. Today, I think you've gone through multiple rounds and millions of dollars of funding. It's someone would start up, lots of founders post 2021 raised pre-seed seed. But in today's market, I think things have slightly changed, right? If you have pieces of advice on founders building early in their career, for building up these companies in this market, how would you suggest that?
Yeah, I mean, we were bootstrapped for almost 5 years. So we raised capital only in early 2020, and I think the whole wave between 20 and 22 was a misnomer. It was not. I don't think you're seeing that again. Right? People have to just get off that thought process. Another 6 months, 8 months, 1 year. It's been a crash landing that has happened with respect to currently the reality check. But fundamentally, if you look at it, if you just go back to first principle thinking on why venture ecosystem exists, it's actually fund for, and it's called risk capital for a reason, right? So there is a higher, there is conviction that people build, but there's a high degree of chances of failure for that business, right? So therefore, even today we have a lot of ideas that, at least in the circuit that we are in, we see companies getting early stage capital. So there is, those ideas have, get back. It's not like it's completely right out. Yes, there is an acceleration to start thinking about how you will commercialize it, how you will, kind of eventually be profitable and all that. But this whole aspect of, profitability also is like very artificial and plasticky, if you will. Like, I don't think investors are sincere about when they say, we want our portfolio. So you're basically defying the whole logic of venture capital if you're saying, be profitable. And you can just go to the market and raise or if you look at Indian businesses, they've all built on friends and family need, right? So there is no Gujarati or Marwadi who's gone and raised capital. There are outliers, but majority of them have raised from their family, and that's how the ecosystem gets built out. So fundamentally, ideas that have legs and have been able to demonstrate some level of traction or product market fit, I think there's still opportunity to raise capital and build it in a manner that is disciplined. Right? I think what has changed though is that because you don't have a lot of capital, I think for us, right, if we had that money earlier, we would have stayed on with that idea of where we bought the holes and all that. We would have done stupid things to just satiate us and say, we tried out. So therefore, that premise doesn't change, right? So you just have to focus on what is it that you're going after and trying to solve, and there is still interest to test, fail, and learn. Right? It's like, I don't think that investors shying away from saying, don't do this, don't do that, and all that. It's also a matter of what type of investors that you need, right? Like you need to have different cohorts of investors in different stages of the company. And that will really help, right? Like we don't have folks who come and say, don't do this or don't do that. I mean, obviously we are, in several ways we were like unlike like a venture back in that scaling process. But when a couple of years back when the whole regulatory sort of crackdown on fintech, we were like really large in July 22, not say this publicly, when the whole regulatory, in 6 months time we had like more than 70% of the revenue getting wiped out, right? Because all of those products stopped working. But so our investors knew that we were in control of it. So they didn't come and say, cut down people, cut down cost and whatnot, right? But it's incumbent on us to basically say, how sustainable is what we're doing, can it grow, right? So therefore, it's as much on the founder to basically start looking at, how they are running it. Because the external world environment is so vibrant that the basis of some of your assumptions can change dramatically in 1 quarter, 2 quarter, right? So that's very important, right? Despite the fact that a lot of companies fail because of that, they've lost sight of what's happening around them.
Yeah.
They're not being, just keeping their ears open around what's happening in the ecosystem. I think capital in some ways is like a byproduct of getting some of these elements right? How do you keep keep going at it in a manner where you keep it nimble, but just don't, if something is not working, and it applies to people also, right? It's just our human nature that, even if you don't like somebody on fire, we just take a lot of time to convey the decision.
Especially in
India, right? Because we just don't like the other conversation.
Yeah.
And similarly in products, right? You don't want to kill something because somebody will get hurt that they have worked on this product. Let me give it what kya jata hai, right? Take 2 minutes.
Yeah.
So that actually hurts in the long run because that procrastination, leads to people getting frustrated. They will move whatever you're thinking of a pivot, for lack of better words. You might not have the A team that you had spent months and quarters together trying to build out. Right? So those are like, nothing new. It's more, how do you codify some of this from an early stage, right? Where basically, as founders and the core product team, ensure that you have you're more frugal about how you're spending. I'm not saying this is you just have to ensure that money is put to good use. Right? Capital is there, I don't see that.
Would you have done anything differently now that you've seen different cycles? You've seen the highs and the lows, right? Demand and probably COVID gave you a lot of influx of business. The ZERF phenomenon gave you an influx of capital, right? But now in today's market, you've seen the other side, 2022 as well. Would you have done anything different personally?
I think we could have raised capital a lot more earlier.
Was it a mindset shift? Was it some sort of just freedom to build the way you want?
Yeah, so we definitely traded freedom for cash. Right?
Yeah.
So that aspect of I think we had by then built a certain degree of arrogance to say we don't need capital.
Yeah.
And in hindsight, if we had raised capital a year or two earlier, we probably would have been like a lot more ready to take on what we're doing currently. Right? So
so growing that faster, I think capital would have enabled you to build out the product a little faster.
What capital did to us, we could not fathom what before the capital is given. So,
your point of profitability that you mentioned, I think there is definitely a slight amount of market push to it, given
slightly, boss.
That's kind of underplayed, but
everybody keeps talking about. See, the thing is that every level you have that pressure, but the reality is that if you start focusing too much on profitability at early stage, you're missing the trees for the woods. Right? So you basically have to. There is a purpose, and there is a certain degree of execution that you need to get to actually maximize on how you can solve for that purpose. Right? Let's say, for example, if we don't resource product engineering teams where you'll get a product, but the product may be suboptimal.
Yeah.
Right? So if you don't want to hire a team because you have to spend significant on payroll, vis-a-vis I'll probably get a A- team where I'm saving 30% on cost and I'll probably turn a profit. That number in absolute terms does not mean anything.
Correct.
So therefore, the best way to look at it is, what's your, is your product finding relevance in the customer's mind? Are they ready to pay for it? And what gross margin profile that you are operating? As long as that is taken care of, and that's why most investors value businesses at gross profit level. They don't get to the bottom line, not because these are loss-making businesses, but if you fundamentally have a gross margin profile that is palatable, anything else below that can be beat, right? And you can accelerate, decelerate based on economic cycles, based on the state of the business, based on market conditions and things like that, right? But if you start doing that at a very early stage, you are actually, you will not see degrowth, but you may not have, probably would have grown 10x, you would have landed up at 3x growth rate. So, which is inevitably going to hurt the investor only because, they will get such lower return.
But what do you think, since you mentioned traditional venture capital model and profitability probably don't go super hand in hand, right? Traditional venture capital wasn't built this way. So what do you foresee is something changing? What are you seeing in the market?
So, being an early stage investor, I think by the time you reach this level of a company, the priorities change. But at early stage, I think I've seen depends a lot on the founder and their DNA. Right, so we clearly see like two types of founders. One who want to grow their company at 2 to 5x growth in revenue every year, and then with a healthy gross margin. I think the VC world really likes that. If you're doubling, tripling, or 4 to 5xing your revenue every year, especially in early because you start at a smaller place, and then again as Madhu was saying, the gross margins. The other type of founder we are seeing, especially these days, is where they're saying, okay, we need to raise the money upfront, some money, like let's say 1.5 to 3 crores, so that you can hire the best resources and build the product and all that, go to the market. But then can we make the company profitable in the next couple of years and keep growing? And then once we hit 15, 20, 25 crores, do an SME. And recently we have seen a few examples of that, being done. Now, these are very few right now. I see that there will be many more going forward.
Yeah.
Because, I think it's a tougher environment to business.
See, also we also got carried away by saying we have to be like few $1 billion to go IPO and all. Indian market doesn't have the depth. You can be like a $200 million value company and then still go public. You'll find acceptance. So I think it's also a false narrative that you have to be unicorn, you have to be like $2 billion, $3 billion for you to stake a claim for. You look at Indian, if you actually look at last 1 year NSE listings, I don't think the average is beyond 2,000 crores in enterprise value.
And if you go a slightly lower SME IPO level, I just released something on my Substack. There are many companies that have gone IPO, SME IPO at 15 crores, 25 crores.
Yeah.
So
at $15 billion, you are in the top 100 companies. At $15
billion enterprise value.
Top 50 companies, enterprise value. It's like market cap, right? At 15 billion, 16 billion market cap, you are in top 50. At 7 billion or 8 billion, you are in the top 100. You can be the 1,000th company. It doesn't matter, right? So I think the profitability ask is more coming from the fact that the pools of capital have dried down, but it's just the economic cycle that is at play. It's hard. I don't see that.
Right. So this actually is a good segue into the whole. So one of the most unique aspects about your company, which I have seen over the years, is that you are now present in 25 markets. Literally, Madhu, you know this, right? Like 5-10 years back in Fintech, there was a very big saying that Fintech does not globalize because regulations are different, compliance, products are different, banks are different, so many other things. And so if you take a company from India to other places, it's going to be extremely difficult. And we also saw many people tried, from US coming to India, likewise, But what we have seen with you is that you have been very aggressive, right? You're not in 1 or 2 or 5 markets, you're in 25 markets at the same time. So what is the unique insight that you have got which others have not?
So I think early on we realized that a lot of whatever we are building in India, there's no other market that can give you that kind of scale like India does, right? Like, in one of the customer meetings in Jordan, one of the large banks there, the largest bank there, the CEO was like, we are a very large bank. We just hope that your platform can scale and on. I said, sir, in all humbleness, my largest customer is twice your country population. So, not just to me, to any folks that are coming from India, don't talk about scale and scale. We have already solved for it. So I think, the core, challenge also actually is the strength as far as product build out in India is concerned. So you are forced to building at a price point that is unviable, and yet if you are able to prove that you can find market acceptance, then everywhere else you go, it's like by an order of 3, 4, 5x rate. Like in the US, for $1 of income that you make here, Middle East is hovering around $2.5, $3. Varies depending on the product. ASEAN is slightly lower. ASEAN is more closer to India. A lot more Indian tech companies have set up shop there. Therefore, that there is some level of parity on pricing. So 1.5, 2x. But West, some products can actually go all the way up to 10, 12x also. So therefore, it's a no-brainer to basically say, boss, let me just set up a shop in the US and do it. But US by itself becomes a distraction in the way we are doing stuff here. Because I think India continues to be this Fintech factory, right, where ideas are getting built and tested. And
but then you said that our maximum opportunity in India is like $200 million.
Yeah. So therefore the need to actually go international, right? So the internationalization requires a very different rethink organization, right? How you build products, how do you implement, how you actually, what channels that you pick to distribute the product. So to us, a lot of that Asia playbook is around how do we get ourselves ready to environments where we are not comfortable in, right? And we chose to go Middle East. Most Indian SaaS companies also do that, right? Like the first port of call is can you do Middle East, can you do Southeast Asia? But I think what we realized is that from how we were operating in India, the other markets were very different, right? Several markets don't have the velocity or the vibrancy of fintech ecosystem. Internet ecosystem is not as mature as India is. So therefore, you have to adapt to those markets, right? And in that adaptation journey, you typically spend every market you would end up spending 18, 24 months before you actually see the first dollar of revenue, right? One level of adaptation is what kind of products will sell in that market. And then, you need to actually do a localized infrastructure, do a localized capabilities, right? Like, for example, most Middle East markets, core banking products need Sharia compliance. A lot of them sort of need Sharia compliance. How do we ensure that it happens? And then you also have attributes around, if we are basically saying there is no fintech action, are there other ecosystems? Can a telco become that proxy for a fintech action? Right? Do they have? Everybody aspirationally wants to be a digital bank, like exchange houses of all the places, right? They all are family-run businesses, but the new crop of management folks, right, within that family businesses, they all want to build like the next digital bank for the region. So then you have to essentially, play to the gallery to say, boss, let me help you become the digital bank of, let's say, Saudi, Egypt, UAE, because I've done this for large banks in India, right? That's my right to, get a second. So therefore, so all of these three things coming together is and then there are regulatory, like NPCA, there will be a local network in some of these markets, you have to get certified. There's a whole data governance aspect around it in terms of how ready you can become. So we now have a template around, like, all the way from culturally not seen like an Indian company, which is by unfortunately, so you have, IT companies that are really large, like an Infi, TCS, which have done exceptionally well, right? Like in most markets, they have a very high brand recall and whatnot. And then you have really small tech shops that, like sweatshops that will get work done, and like somebody sitting in Bangalore or Hyderabad get the work done. And several of them actually have, run away from delivering or, taken the project, not delivered. There is no middle layer. So you'll have tier 2 tech companies, but they're not very present in Middle East or Southeast Asia. So there's a gap that is there with respect to how the market perceives somebody who's not very large like an Infosys, but also not very small, which is like a 10-member, sweatshop in somewhere in a tier 2 town. Right? And therefore, that in itself is a challenge to us, right? Like, how do you actually, for somebody sitting, thousands of miles away, very hard for you in one meeting make sure that you are not the guy who's going to disappear tomorrow.
So you need local people.
So you need to just first, like our Dubai office is essentially to say that we are part of that ecosystem. To say that we have like about 8 or 9 nationalities in that office, right? Like we have a couple of people from Jordan, a couple of them from Saudi, 1 or 2 from Egypt. So then you are seen like part of that ecosystem than flying in people from India saying, they will do product and whatnot. So what you've learned is you need to have front-end market-facing BD who are local. They can do the best job of it. Implementation team can be somebody in that region, right? Like a Saudi can have an Egyptian implementation guy who's cost-effective, but can also, talk to the customer, talk to our back office to basically implement a program, right? You need language skills on both sides and things like that. And then your entire product engineering can be in India, right? So that's what has worked. So that's what we are replicating. So we'll create hubs. So Dubai was a hub which catered to almost about 10, 11 markets in MENA region. Now we are, like Africa is maturing this year, so we are kind of taking out one or two more hubs in Africa, which will serve as a similar setup, right? We'll have like a small satellite type office which will have like sub 50 people, but will serve 10, 12 markets in the region. We have a similar setup in Malaysia, which caters to Southeast Asia. That's all.
I'm trying to understand the strategy before, right? So, is it like you do a lot of research and planning and understanding of these markets because you're putting people, you are localizing the product, you're doing so many things?
Some of it is.
Or is it like very startup-y where you throw spaghetti and see what will?
So that we did like 3-4 years ago. Now it's very. So we go to the extent of like Indonesia. Everybody talks of as the next big opportunity in Asia. The reality of it is that it's very hard to execute in that market. So then we got somebody to run a process of market assessment for it. One of the big consulting firms did that. We had to, before investing dollars, we basically said, boss, yes, there is opportunity. Right? Like, we may not see it today, but if we stay invested enough, we'll actually be able to extract the opportunity. So therefore, within ASEAN, we are only focused on 3 markets where I have people on ground, Indonesia, Philippines. But a smaller market like, Lagos, which is also part of the ASEAN grouping, or Cambodia, we are looking at strategies that are very different, right? Where we'll have somebody who will take our platform and execute on ground. It still serves the purpose. We don't need to put people and wait for returns to come. And the network effects are the good part in some of the regional playbooks is that one bank in, let's say, Egypt or Jordan will have like 5 countries where they're operating. So you get actually market access in 4 or 5 markets. Yeah. So there is work in that becomes the mode itself, right? Like if you are localized for 30 markets, it's going to take so much more longer for anybody else to sort of get to that level of communication.
Very interesting. Very quickly, we'll also talk about acquisitions because you have done a lot of them. Can you explain like how did you decide what acquisitions to do? And then now, after a couple of years, I think recently you have not done anything. So, there's a time period now.
Not ready for
it. Now you must be seeing some data after the acquisition, how these things have worked out or not.
Yeah.
So can you share some?
Yeah, I mean, like back to the whole moving from, moving to the whole banking execution, right? We realized that a lot of the work that we were doing, and we kind of built 3 layers, right? Like we were in the payments or the distribution layer, which is what we were good at. We also had to tie in the manufacturing layer, which is where regulated product like manufacturers for banking, for management, etc. And when we stacked up what all that we can, built, we realized that a lot of these platforms that are very core to running a financial services business, it's very hard to actually find market traction in the sense that you can build up like a core banking product is like very basic ledgering product. Like there's no rocket science in it. Okay. But the reality is that even if I put like 50 engineers behind it, spend a year building it, very hard for a bank to become a guinea pig and say, yes, I like you guys, so I will take this platform. It could be the best written software, a piece of software there, but banks will not take the look at it. So demonstration effect plays a big deal in some of these products. Right? And so therefore we said, how do they get demonstration effect? That is one. The second is, a lot of these products also have very nuanced execution requirement, right? Like getting PMs to adopt and go deep into a LMS software will take them at least a year to be like a tier 1 product manager in loan management software. So if I flip it, if we are able to get businesses that had done an execution, if the founders are executed on it, they will know to a great degree, they're the best product managers that you can hire. So therefore we said, in products where it's only a time arbitrage, right? We'll go out and acquire businesses. So we strengthened our capabilities around ledgering products, which is core banking, core management and all, where we looked at businesses that have been in the system for like 5+ years, and then have like unfair advantage in terms of the people, the founding team who have executed up. Right? So that was one cohort of businesses. And then, the layer that sits on top, which is the third layer, which is where we believe, our platform tolling and monetization can happen, is essentially things that are, for lack of a better word, we call as value-added services. How do you use alternate data to underwrite? Like, can I get a tartan to actually come talk to my platform and make that more relevant for a bank, which is, let's say, issuing an unsecured loan? So those are layers that we are now, within the company, these are 0 to 1, right? In that, when we partner up with someone like Tata, we say that what Tata is doing is very interesting. How do I collaborate? Right? It starts as a collaboration. And then when the team see eye to eye, when we feel that, this is something that we can actually in-house, right? We're not us building it, but can we get the team to actually sort of continue building, because we have a much larger canvas to distribute and whatnot. So a lot of our acquisitions have now moved into that bucket where several of them are 0 to 1. But we now have the ability to basically say, it's okay, we stay invested. Let's see where this takes us.
So we are doing this.
We acquired a data company recently.
Yes.
The data company, also now we announced in December, where the value of that platform was not just about what the product they were offering. But if you look at data products within the banking world, we can use the data they are using it for customer lifecycle management. Okay, so that's the product offering, right? So it's an AI-based lifecycle management of a customer. So you run, if you deploy that on a credit card business, it can predict attrition, it can basically run offers, it can manage everything that a portfolio manager would want it to be managed. But if you look at the context of the data, you can use that for risk management, you can use that for controlling fraud, you can use that for underwriting. So basically you're saying, if these acquisitions can accelerate our ability to reimagine how we'll bundle products together. Right? So my one data product is now 6 products subsumed into one capability. So therefore we we've kind of got to a maturity where we know what this platform will be in like a couple of years from now, rather than just looking at it as like, we never looked at it as a, can this add like a few $1 million to our revenue? And also over time we learned, not all of them have gone well also, right? Like, founders come with a lot of ego, so you have to manage that part of it. Teams come with a lot of aspirations, you have got to manage it, you need to make sure that there is no friction, like, the office that we're sitting in, right? We didn't want to uproot everyone because we are a Chennai company, right? So we have tried to preserve what those small teams are, and therefore, if you actually see, we have 150 member teams in multiple cities, because there is a certain degree of, a drive that is there in a small team.
Most of
it
the
is not
founders
small.
have stuck around.
Yeah. two, three of them, one of them have went on to start another, a couple of them have gone on to start another company. We had just one founder who turned out to be really sour and bad in this problem. I would like to believe if everything else is okay. But yeah, so it's okay. I mean, we have 15 founders in the team. I'm pretty so.
That's a senior leadership.
Yeah.
Of the pyramid.
So it may not be senior. Like some of the founders were also very bad, right? Like they'll take like a senior product role.
Yeah.
But the thought process and thinking, founder doesn't switch off, right? No, I'm not no longer a founder.
Ownership is
very different.
So if I was to summarize, right, like just looking at the business, that you have market presence and captive customers in India, a lot of big ones, and then you're now in so many other markets outside. And then now you have like a whole suite of products because of acquisitions and things you have built. So there's a massive revenue maximization opportunity here by selling all these products across all these markets that you are present in.
Yeah.
That's
So I think in the way we are looking at it, we just felt that there aren't platforms like us in other markets, right? We said not there for a reason that maybe the opportunity doesn't exist. But if that is not true, then it's a land grab as far as we are concerned. And we'll get to US also at some point, right? Like, we're not in a hurry or rush to go to US. The level of maturity that you need to serve US is radically different to how we do it here.
Sure.
So we have at least like a couple of years. We still have some customers from the US. We have a small, sub 5% of our revenue coming from US. But yeah.
And the market maturity also means US is also a market where I'm sure there will be similar products already existing. Giving that time frame, those will also probably.
So we have like in the company that he quoted, right? Market when we looked at where equal to revenue cost is 40%, where at 10-11%. The people cost is my margin, right? So so we are like, I mean that's the classic Indian IT story, right?
Yes, okay, that's But
so the thing is that I think what's very different in several other product ideas. SaaS businesses that like you have a US counterpart, you have an Indian entity also, whether it's Salesforce versus Zoho or all the others. The most important variable is that our products are backend tested for India scale before it goes to US, right? So in US is this third world country that needs a lot of this tech which can help them move up the value chain. India has come, right?
So one of the US unicorn that I worked for, their CEO was there, and basically one of the biggest platforms, in India coming up. They asked this question that can you handle this scale? And he said, oh yeah, we run Wells Fargo runs on us. And so he asked like, what is the number? X. Then we have like 10x of that.
So it's scale, right? So we look at data, right? Like we in core banking, for example, the most part of Middle East where we deploy on. That business case is underwritten saying in a digitally active customer you have like 8 or 9 transactions a month. Okay, so that's all. So if you are, let's say somebody who's building this core platform sitting in Europe, you're serving to an audience that sees this volume. India, that number is 60-65 way.
Oh wow.
Okay. Yeah. So you are and apply that with number of people and stuff. So therefore the scale complexity is like mind-boggling for you never have we actually don't worry about some European or American company taking away we'll one outprice them and the complexity and they just have to deal with one bank. You're like super confident for bank. There is no way.
Madhu, I think we've discussed tons and I think a fintech discussion will probably last us another day. We could go on and on. But we come to the last segment where we'd love to get to know you as a person, and we have a fun little rapid fire for you.
Okay.
To kick this off, I think one thing that I want to do, you have offices across the world. You've been in Mumbai for 15 years. Your biggest office is in Chennai, and we're recording this from Bangalore. If I were to be edgy and ask you a controversial one, which is your favorite city/office and why?
Yeah, I mean, I think Mumbai is home. Good for me, I'm not quite. So we tried moving back to Chennai a few years ago. We just came back as fast as we went there. I think between, I commonly joke that Dubai is the best Indian city. And a lot of
Richest and
people-
best.
a lot of people think that I had moved there because the market has to actually believe that you are invested in that ecosystem, right? So therefore, like I took an apartment, my cards, visiting cards that I keep in that region. So everything is localized to the extent that it is in Arabic also, right? So we have got to do some of this just to make sure that people don't see that this is just like optics, right? But I think Mumbai is you hopefully continue with that.
The city of dreams, for sure. Another one, I think, more from my lens. Madhu, you built products at City and Visa before starting this. We've also seen great examples of very young founders with amazing company. If someone was to start up today, right, across the segment, what are some advantages that you see having worked in the sector that building a company versus many other, I'm sure, pitch decks coming your way for angel investment and the advice that you give to them? If you could share with the larger audience just the advantages of both. There's no right or wrong, but where does your heart stay? What are some learnings you've had?
So I was a product manager, I continue to be a product manager. Right? So I think that never goes away, right? In the sense that even today, we just basically go in and start saying, why can't you do it this way, that way, and things like that. So I think to a question around, do you need a fair degree of operating experience? More so in the Indian context, at least in financial services, it actually does a great deal of help. If you know the ecosystem, if you know how it operates, just being in the bank ecosystem will also allow you to, well, commonly joke they're inefficient and they take a lot of time. There's a lot that goes behind in a bank to actually put something in a framework. Like, if you look at a bank CEO, for the number of things that hits them, they can't have more than 3 bullet points in their board presentation. So why will a fintech partnership feature in that, right, if it is not meaningful? So therefore, that appreciation will come only when you are in an operator role. That's really important, even if it's a small scale. And you have to be in chaos, right, for you to thrive, right? And that is the nature of the game once you start a business. So therefore, go into zones of, like, even if you are getting into an operating role, you should get into zones of uncertainty, businesses that are really not up there, right? Successful companies, the problem it's a great logo to have, but your learning curve is flattish. Right? People love 0 to 1 journeys because of the chaos that it comes with, and the learnings can be sort of accelerated. So I think there's no one straight jacket as a word, but I would tend to sway towards having a little bit of that experience in an operator role.
Yeah.
But
there is no one fits. Yeah, that's
innovations, anybody can
definitely
be that.
So we want to hear from you some very objective answer, like some examples or something. So apart from what you guys are doing in the overall financial services space in fintech, where do you still see opportunity? Give us some examples or segments where one should be looking to build.
say something that you don't have time because you're down here. But if you had, if you were to write 3 angel investment check, what are 3 fintech ideas you would be?
It's still a lot.
This is not for my personal expense.
There's still a lot of white spaces on. If you want to characterize it as retail, SME mid-market, and then large enterprise. Within the retail space, I think there is still a lot of work to be done on the data side. You still don't have product of finest, right? You have products that are there which, we just strapped on to existing incumbent products, but you can actually carve out niches around, some of the capabilities that you can build out on the retail sector, but it's very limited. The probability of success is also very, very low, right? Because somebody will come into, gobble you up and things like that, and very hard to raise capital as well. SME mid-market, I think massive opportunity. What new banking capabilities can get built out, and there adjacents are just wide open. Right? We spoke about bookkeeping and stuff like that before we started recording. So between what someone like a bank open is doing, there is space for at least like half a dozen of them to actually build and become very, very large part of it. It's just nature of this market is that, like we are in Europe, but under one flag, right? So every few hundred kilometers you have language, music, everything changes. So you can be like a SME neobank just for Tamil Nadu, right? And be like a few $1 billion in value, few $1 billion. Okay? You don't have to go boil the ocean and say I'll be pan India, because the trading community there operates very differently to how a trading community in Bombay operates.
Yeah. But I would like to challenge you a little bit on that, because what, at least from an investing experience, what I've seen is like SME space is where you go to die. Basically, this is such a graveyard. Like, we have seen so many.
That's because you were spreading yourself too thin. That's what I'm saying, right? You can pick one category. You can say that I am building a neobank for fisheries, just as an example, right? And because there are a lot of SMEs who are there. So within that ecosystem, you can basically say that, boss, I will work only in these two catchment areas. Okay. So I was with.
I agree with your premise. Right? That focus is very important. But the issue there was that, say for example, there is no neobank which has been able to succeed in Tamil Nadu, but a 5-star finance, which has nothing to do with technology or anything. They have opened literally branches in tier 4 cities, and they have a 800 crore PAT today. Public listed company, beautifully they have executed. But there is no tech, there is no neobank. It's just that no bank was reaching there in tier 4 cities.
Opportunity now. So
that's why I'm trying to bring it up, because he knows like so much.
So that's the point, right? And often we get just carried away by thinking that tech is the solve, which is not the case, right?
Yeah.
So in a lot of these places, that's why I'm saying that if you narrow down the focus, right, and address it to only a small cohort of customers,
right?
That small cohort need not be so. If I'm sitting on like $20 ARPU, right, and I have only 100,000 customers, it's still a $2 million business. Where do you have profitable? You don't need you need a 15-member team to run that business.
Right.
Like insanely profitable. You can run that for the rest of your life. Right? Then you start going into our problem. Our incentives are misaligned where you want to go from Series A to B in a definite time frame.
Yeah.
Therefore, you are basically just focused on top of the funnel.
Yeah. Right. So this is the part I don't understand, that there is a narrative that you have to build a tech company, you have to build a fintech company.
You don't have the hard part is the business side of it. Tech is easy.
Yeah.
Right. I think to a large extent, you don't have what Bajaj did with other players. Right? They have an unfair advantage in terms of ecosystems, like what they do with the Viveks and whatnot. It's because it took them 15 years to put that whole interrupt, right? It's not a war. So that is business. The tech is only an enabler.
So yeah. Similarly, this whole loan against property in tier 3, 4 cities, which 5-star finance has done, Shivalik Bank has done. There is an opportunity for 25, 30 more companies to do that. But it's not a tech business. So very few entrants in that.
I mean, if you look at regulatory narrative, right, the reason for SFBs also is exactly this reason, that you don't have very localized, specialized licenses. That's why you will find that SFBs have a very high, priority sector lending target. 70% of their deployment should be for BSF, right?
Yeah.
Reason is that they are supposed to help in the neighborhoods that they are very strong on, right? Like, if let's say I'm Tamil Nadu focused, and I have to ensure that I grow the base there and help SMEs and things like that. So I just believe that the whole neo-banking in India, if at all it has legs, it is not in consumer, it is only in the SME sort of space, right? So that's the second. Large market is like crazy shitloads of opportunity.
Enterprise.
Enterprise.
Totally.
It's insanely profitable.
Right.
Between treasury, cash management, they are all running on 30, 40 like the technology came and man landed on the moon, it continues to be the same.
Yeah, also enterprise side, I'm amazed the amount of success that companies are seeing. Like, I worked at Proof. Last 18 months, if something has taught us, is that whoever was focusing on enterprise is still doing very well.
Yeah.
Who was trying to sell to SMEs or small, companies has been crushed.
Yeah. I think this is the theme even beyond fintech. If you see general side, I think the similar kind of narrative there. But maybe time for a quick rapid fire. This is to get to know Madhu more on a personal level. We'll keep shooting ideas to him and let's see what comes of it. Madhu, first one for you. If you were to grab dinner with one person from history, or maybe a founder that you find inspirational apart from your co-founders today? Who would that be and why?
So, I think of the peers that we have today, Bhavin has been like a phenomenal entrepreneur. Zita, I think she's been like self-made. Every time I hear him speak to him, like I come on with like 3-4 new things that we have done, right? And I think also in the way he kind of operates, right? One guy.
Yeah. Bhavan, I think, is a huge productivity geek. Madhu, if you have a productivity tip for all of us, what would that be?
So in fact, I have I've started doing a lot more time management now than ever before, right? Like anything that I can, I do, repeat. I unabashedly sort of just delegate, right? I just have to get it to a point where I can delegate and not, and stepping out, like a lot of times you get carried away by, this customer I know, so I have to be there in front, right? It's great, but that time is put to good use for doing, more product strategy or pricing strategy than, when getting stuck in by traffic for 3 hours. So I think that I've actually increasingly tried to zoom out and say, nothing to be disrespectful to any customer or anything, but it's the fact that the team can sort of do it. Right? So, and it happens only like when my regional head in the Middle East keeps comparing, saying the amount of time you spend for that market is like, you're not doing service to us, right? Like, so something of that sort.
Madhu, your favorite guilty pleasure, if there is something that you spend a lot of time on outside of building M2P?
Don't have much of time. I jam with my son, so that's he's at an age where in a few years he's going to just we are going to be empty listers, so may as well maximize on
the time to spend. Yeah, I think that's a common one. And Madhu, if you were not spending too much time on M2P, or there was another idea outside of M2P, say you're not building M2P today, is there something else that you would pursue?
So I wanted to retire by 35 and become a professor. So I think I just like teaching. So whenever I get that time,
You should do a fintech school.
So I'll go back to that.
At some point.
I told my wife that when we started dating, that we said, by 35 I'll retire and become a professor, we move to some small town or somewhere. That plan continues to be there, it just got pushed out maybe like 10-15 years.
Let's ask about the food as well.
Yes.
Idli, dosa, vada, pizza, what?
No, I think so. So I'm a veggie, so therefore I end up wherever I go, I travel a fair bit, right? Like in 2022, in that year I actually went to all Sarana Bhavan outlets internationally.
Oh, okay.
13 or 14 of them, every market. So that year I took like 140 flights to some 70, 80 countries. And
You must be loaded on miles.
15 odd Sarana Bhavan outlets I visited. Hunt for like veg
The
food.
best, yes.
But I'm not getting key on food, so right now it's as long as it's veg, it's fine.
So
and in fact,
we are the best.
So cultural aspects, right? Like
Yeah.
if you see, Egyptian food, the injera is like the closest to dosa that you can get.
True.
So, and if you go back and look at why, there is that, I think a lot of trader, like a few hundred years ago, who actually have gone and settled there. The food is inspiration from, India.
Yeah, it is. The Ethiopian fusion is actually very close to
Indian.
So.
And you have a lot of veg options as well.
Yeah.
So
That's true. That's true. I learned that recently as well. No fintech podcast would be over without me asking you this 3 questions on your personal finance side. Do you have a tip for people on the personal finance side or in general?
I'm
people
really bad at it here. I've been in F2P and like maybe about where companies are going to stay like 40 companies.
No diversification? Not much. Okay. If you were to think of what is the largest discretionary spend in the last 5 years, have you bought something? It could be a house, a watch, a car. What?
So I got a car last year, an electric one.
Which one should this?
What on the Mercedes EQS, that is
Orange.
the
Electric
biggest
vehicle.
spend.
No?
Yeah.
I think it's electric vehicle.
Fantastic car, yeah.
You find enough chargers and all that.
So I don't drive as much, but it's got like 500 km range, so it's pretty decent.
Yes.
Pretty decent. So electric version of an S-Class, so it kind of basically in a way.
Very nice. I think, like I mentioned earlier, we would have loved to continue this discussion as for as long as we could, but we far overshot the time that we blocked on your calendar. So respecting that, Madhu, thank you so much for your time today. I would love if Amit, Madhu, if you all have any closing thoughts, it's a fintech.
I think whichever opportunity I've got with Madhu, I walk away learning so much. And as I was saying, it still looks like when I met him the first time, but a bhandar of like knowledge and so much to learn from fintech.
Yeah.
So thank you so much for your time and thank you for sharing all these insights.
Thank you guys.
Thank you so much.
Awesome talking to you. And yeah, I mean, I'll just leave with this thought, right? I think we have, I often say this, that India will be the fintech factory for the world. So a lot of ideas that get badly listed here over the next decade or so will go to all parts of the world, and that's what is exciting for us. And folks who are building, I don't think this funding slowdown and all is just an excuse, world.
Absolutely. And for folks tuning in, if you are interested in the fintech journey, Madhu and his team are always looking out for exceptional product folks, as they mentioned earlier. So the top 1%, M2P is probably the place you want to be. Do check out their journey. Madhu, what will be the best way for them to reach out to you in case?
Yeah, I'm on Twitter and social media is the best way to.
Awesome. Thank you so much for your time today.
Thanks.
Thank you.